Alarm outside headquarters of Silicon Valley Bank in Santa Clara, California today.
They just came out and told us that the bank is shut down.
SVB, the 16th largest bank in the U.S. with $175 billion in deposits, is now the biggest American bank to fail since the 2008 financial crisis. Its customers are primarily businesses and investors in the tech sector.
The root cause of the failure here was a sudden and significant increase in interest rates.
The Silicon Valley Bank collapse has put the markets in turmoil. When things like this happen, human nature kicks in, and it's fight or flight for most people. The real question is whether the Silicon Valley Bank collapse is part of a larger banking situation like what happened in 2008, which everyone remembers, or if it's more confined to the single bank and it's a huge opportunity to get long in the bank stocks now while they're at their lows. In this video, we will discuss, can what happened to Silicon Valley Bank happen to other banks as well? What is the outlook for bank stocks moving forward? How do we best trade the bank stocks now using options? And we will show you exactly how to place a LEAPS option trade in Bank of America on the option trading platform.
Hey guys, Darren here. Thanks for joining. We talk about action steps you can take today to increase profits and reduce risk in your options trading portfolio. Please check out and download the free options workshop in the link below.
It talks about the two main reasons why options can be less risky and more profitable than just buying stocks alone. It also details how to profit in both directions and pick your win percentage, which you can't do just buying stocks alone. Also, please hit the like and subscribe buttons below. I appreciate it, and it helps to get the video out to more people. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. Can what happened to Silicon Valley Bank happen to other banks as well? Yes, it can, but it's extremely unlikely. Here's why. Silicon Valley Bank was different from most other banks in that it was a very niche bank. It loaned money to tech startups as opposed to the general public, thus the name Silicon Valley Bank. Back in 2021 and early 2022, Silicon Valley Bank took nearly $100 billion and invested that into government-backed bonds with a significant portion locked away for 3 to 4 years at an interest rate of just 1.79%. So they basically made a bet that the central bank was not going to raise interest rates as fast as they did. When they were wrong, it put them in a very dangerous position. Silicon Valley Bank was now in the red on all of this money since bond value is based on the yield. Once the tech customers got wind of this, the trouble began. People started to talk. Most of these startups had way over the $250,000 FDIC insured limit in their accounts. In fact, 97% of SVB's funds they held were not FDIC insured. So at the first sign that SVB was having issues, many of those tech companies pulled their money out. When they all did this at the same time, it initiated what is called a bank run, and it was just too large for the bank to manage. Bank of America, Chase, Wells, and Citibank are not like Silicon Valley Bank. These banks lend a much smaller portion of their portfolios to tech startups. Silicon Valley Bank likely had a much higher percentage invested in tech startups. Silicon Valley Bank was known as the venture capital funding bank for the Silicon Valley. Most of the other bigger banks are lending to the general public, so they're much more insulated should business loan customers ever pull their money. For your information, if you have more than $250,000 in any one bank, I still recommend you spread the wealth and add some additional banks or brokerages so that you have the FDIC insurance coverage for all of your money. What is the outlook for banks moving forward? Banks are a great place to invest in strong economies. When consumers are spending and unemployment is low, this is when profits tend to grow and loan defaults are typically kept in check. On the other hand, banks tend to perform poorly during recessions and uncertain times. So banks are a cyclical business. There are a couple of reasons why banks tend to perform poorly during recessions and other difficult economic climates. For one thing, they can face a wave of loan defaults if unemployment rises. Also, consumers pump the brakes on spending during recessions, which leads to lower demands for loans. Lastly, when interest rates are rising, mortgage loan activity declines. However, banks make money by lending money. They borrow at lower rates and lend at higher rates. At least that's the way it's supposed to work. So higher rates are generally good for bank stocks. Even before the Silicon Bank collapse, all of the bank stocks have been hit due to the current economy and rising interest rates. However, with this current turmoil with SVB, and unless we see lines at Wells Fargo running out the door with everybody pulling their money out, banks are on sale right now, and here's why. Let's take a look at one of my favorite banks, Bank of America. When we look at the one-year stock chart on TradingView for Bank of America, we see that it's at a 12-month low. Now we can also go to FactSet Earnings Insight and look at the 12-month forward PE ratios and see that the financials in general are very low at 11.9 PE. So they're cheap. We also know that banks tend to perform well coming out of recessions. Earnings growth is expected to turn positive in the second half of this year, so not too far off. Looking at the FactSet projected earnings growth for the financials, we see that they're expected to be around 12 to 13% growth for the year. Revenue growth will be great as well at around 8%, the highest of all the sectors. So since S&P earnings growth is expected to turn positive in this third quarter, we should consider getting out in front of it now while the stock prices are still low. I broke down the banks in a previous video, which I'll link to below. I like JP Morgan Chase, Wells Fargo, and Bank of America. I think they will all do well over the next year. However, we will go with Bank of America here since I think it's one of the best. So how do we place a LEAPS option trade in Bank of America right now? Let's go to the Tastyworks trade platform. It's the best platform for trading options. I'll put a link down below. We punch in BAC in the upper left and make sure we hit the trade tab in order to see the option chain. We see the stock price is currently $30. We will first look to buy a deep in the money call, which is called a LEAPS option. I like to go out about 2 years, so we will click on the January 2025 option chain. We click on the ask to buy the 20 call option. We go deep in the money in order to closely duplicate owning 100 shares of stock outright. The cost is $1,200. However, with the stock price at $30, there is $10 intrinsic value already built in. So I like to look at this as a $12 cost minus the $10 intrinsic value. So it's really like paying $2 to control the 100 shares of Bank of America. However, think about it. To buy 100 shares outright at $30 is $3,000. So we are paying less than half that cost at $1,200. So let's switch to the curve mode and look at the profit zone. If the stock moves from $30 where it is today up to $40 where it was just a short time ago, we should make about $850 in profit. I think this could easily happen as the Silicon Valley Bank dust settles and people realize that it's not affecting all the banks and they're not all collapsing. The LEAPS option trade is a cost-effective way of investing long in the bank stocks while they're still at lows and poised to move higher in the second half of this year. The Silicon Valley Bank collapse has presented an opportunity to buy the bank stocks right now at an additional deep discount.
All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Also, let me know what you thought of this trade and what you're trading in your options trading account. Thanks for watching and see you in the next one.